Today, I want to talk about how the director of the film Dumb Money has said the AMC play is not over and that a short squeeze or run up will happen again. I also want to explain one of the new potential catalysts that could cause that short squeeze. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, this user tweeted this video of Ben Mezrich talking about retail investors' ultimate goal in this war between retail and Wall Street. Now, I'm not going to show you the full video of his CNBC interview, but there was a few things he said that I found very interesting. So let's take a listen.
Right now, but 9 million people were gathered together for a moment buying a stock because they were fighting a battle. You don't think that's going to happen again? You think it's over? I think that's crazy.
No, I think it may very well happen again, but the truth is Gabe Plotkin just bought a basketball team.
Hey,
it's hard to look at this.
Everyone else is saying, well, it didn't matter about the money. I'm broke, but it didn't matter about the money.
Listen, there are people who are going to make money in the market. I think Wall Street is going to figure out a way to adjust and try to, but I think if you ignore the fact that millions and millions and millions of people were pissed off enough to buy GameStop to stick it to one hedge fund, I think you're blinding yourself.
Oh no,
to
I think
really
there's a lesson
on.
in this, which is the rapidity and the strength of a group of people, and just how quickly things can move.
Now, so there's a few interesting things Ben mentions there that really caught my eye. Firstly is that in January 2021, between AMC, GameStop and all of the other meme stocks, from his research there was a total of 9 million people. That's not 9 million people just invested into AMC, that's 9 million split between all meme stocks. And of those 9 million across all meme stocks, at least 4 million of them still remain in AMC. Again, I'm not saying all 9 million had AMC, maybe it was only 4 or 5 million, so pretty much every single retail investor from January 2021 who invested into AMC is still here. And he also called the CNBC interviewers ridiculous for thinking that it might not happen again. He seems 100% sure it will happen. I also found it really interesting how angry this specific news presenter got about Ben's words, but that's a story for another day. Ben also had a very interesting reply to a tweet earlier that said the shorts won, the stock is down. Gabe Plotkin bought a basketball team, except for it's not over. Well said, Ben. He said because shorts haven't bought back the shares they owe. They just sold more, manipulated more, and spread more lies using their paid network of mainstream media. And Ben replied saying, yes, as I told them, it's not over. If Wall Street thinks this is over, they don't understand what's happening. So Ben, the author of the film Dumb Money, is 100% certain this play is not over and that it will happen again. And the potential new catalyst that could trigger the short squeeze is the top financial regulator seeking a global clampdown on hedge fund borrowing, saying the FSB's Clause Not warns of the risk to stability of debt buildup outside the mainstream banking system. Now, this isn't the SEC or the FCA, this is the world's financial stability watchdog, and they're launching a probe of the build-up of debt outside traditional banks, as it seeks to limit hedge funds' borrowing and boost transparency. So the world's financial stability board could force the SEC or could force American hedge funds to borrow less, aka return borrowing. And for those hedge funds that are already close to their borrowing limits, they'll be forced to reduce borrowing, aka margin calls. aka they'll be forced to close out of long and short positions to reduce their overall leverage. So the chairman of the World's Financial Stability Board told the FT the review was intended to address rising risks from so-called non-banks, which include hedge funds and private capital. And Not said the review was a priority because non-banks' leverage can potentially threaten financial stability. And he said during the March 2020 dash for cash, highly leveraged hedge funds were widely blamed for helping to send global bond markets into freefall. Now, this is a really interesting possibility because the hedge funds can't pay their way out of this one. Paying off the SEC in this instance serves them no benefit, because it's not the SEC requesting these hedge funds to reduce leverage, it's the World's Financial Stability Board. And they hope to announce recommendations or forced recommendations on monitoring and limiting non-bank leverage next year in just 2024. On top of this, StockSpat has tweeted something very interesting about AMC's FTDs. From this chart, I'm trying to kind of hide it off screen, but you may have said in May of 2023 that hedge funds somehow covered all of their FTDs, as obviously we saw this point here in green of minimal fails to deliver. But then all of a sudden you could see a few months later in August that hedge funds did not cover any of their FTDs and actually incurred significantly more. In August, we saw more FTDs than ever before, topping over 50 and over 60 million in one singular day. That's over a tenth of the entire AMC float FTD'd or failed to deliver in one singular day. Now, you may have seen the FTDs for the last few days of August, and you may think the hedge funds have all of a sudden closed out of all of their fails. But what makes you think that when we saw a massive spike just a few months later? This is likely those hedge funds engaging in those sham reset transactions I spoke about the other day. Obviously, the SEC used to do something about these sham reset transactions, but it seems they don't bother investigating them anymore. And with AMC's FTDs, you can see they do ebb and flow in periods of high FTDs and then low FTDs when they've used those sham reset closeouts. But each time they use that sham reset transaction, FTDs just grow more and more and more. Maybe the next time these FTDs roll around, maybe it's in December of this year, we instead of seeing 50 million FTDs, see the entire float failing to deliver in one singular day. Imagine 150 million shares that fail, or 190 million shares that fail, when there's only 190 million shares in issue, especially with retail investors holding 70, 80 or 90% of all of those shares, and institutions and ETFs holding the rest of those shares that never sell shares, somehow trading more than the entire float, and not even trading more than the entire float, but failing more than the entire float. I think at that point the US stock market would just become a laughing stock for the entire world if the SEC did nothing about it. And Suspended POS tweeted saying the mainstream media is now trying to cover both sides so they don't look dumb when AMC rips. The Street's new article says AMC stocks bulls versus bears. Is the stock headed for $45 or $5? It seems the Street knows something is up with AMC and they're now trying to cover both sides of the equation, or both sides of a possible AMC price. They obviously don't want to look stupid when AMC rips, they're now trying to slowly cover the upside as well. And InvestorTurf also tweeted saying, here's another interesting fact. The most effective method to counter short sellers is by fundamentally improving a company. Saying Tesla and many other companies, especially those from the dot-com bubble boom, achieved this successfully, and many other companies have the potential to do the same. If a company continually exhibits weak fundamentals, short sellers will persist their attacks, often employing unethical practices, until the business goes bankrupt. Even if the SEC did take action, a company with poor fundamentals is still at risk of struggling or going out of business. And that's why AMC has been continually improving those fundamentals, generating more average revenue per theatre showing than ever before, coming up with new revenue streams, new profit lines, and everything else under the sun. They're cutting costs, improving revenue, and improving that bottom line. Not to mention the theatre industry and the spin-offs of the theatre industry, such as showing live music shows, is growing faster than ever. All AMC has to do is continue improving these fundamentals and AMC's stock price will guaranteed hit new highs, just like Tesla did, just like Microsoft did, just like Apple did, and just like tons of companies have done before. And it also seems Representative Ralph Norman asked Gary Gensler for the audited share count of MMTLP today and said they will send another letter to the SEC, which I went through earlier. It seems these representatives and the Senate and the House Committee for Financial Services are demanding that Gary Gensler do something about the unjust in MMTLP. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.